All right, good morning, everybody. Happy Thursday. Welcome into today's edition of the Trade of the Day Live. My name is Blane Markham, Chief Trading Strategist here at the Optioneering Team, and I'm so excited to have you here in the room live with me today. Today's edition of Trade of the Day Live, it's actually just going to be me. Unfortunately, Helaine, she had an appointment, was not able to join us this morning, but wanted to, still really excited to be here, be leading today's Trade of the Day Live with everyone. And certainly an interesting day in the markets. A lot going on. Really feels like the market is tensing up in anticipation of tomorrow's big speech from Fed Chair Powell at their Jackson Hole meeting out in Wyoming. Should have had my Jackson Hole sweatshirt on this morning with that going on tomorrow. But, it really feels like this whole week has kind of been somewhat of a waiting game, kind of leading up until that speech tomorrow morning. We certainly have had some things going on this week. There's obviously been a lot of activity. There's been some significant rotation in the markets, a lot of stalling out in a lot of the, high flying momentum names and, really strong market leaders. You're seeing a lot of rotation out of those names into other pockets. We're going to touch on that here in just a bit, but that really is the big driver, I think, of ultimately where stocks are going to end this week is likely what is going to be said and what the market reads through in tomorrow's speech from Fed Chair Powell. There's a lot of corners of the market right now that are really anticipating the Fed to start cutting rates next month at their September meeting. And they're hoping to get, somewhat maybe a little bit of a nugget of, confirmation tomorrow that maybe the Fed is setting up for a bit of a pivot here in the back half of the year, in these final couple months, the only 3 meetings left. So, that's what it really looks like the markets are kind of, really tensed up for right now. But let me go ahead and share my screen. But while I'm doing that, I see a lot of our regulars here in the room. I see Brad, I see Sydney, I see Holland, James, I see Paul. Well, welcome in, everybody. So I really appreciate you all being here. And just a reminder, too, before I go ahead and share my screen, we always love to hear from you guys during the call. So if you have any comments, thoughts, questions, anything like that, make sure to go ahead and post them in the chat, and I'll make sure to knock those questions out for you. While we're going through things today. So as I always like to do, at least just take a quick look at the S&P 500 chart starting off these Trade of the Day live calls. I think it's really important to always see where the market is. And of course, today's trading, we have somewhat extended that move to the downside that we've had over the past handful of trading days. This, if we were to close at current prices, this would mark the 5th consecutive market day that the S&P 500 at the index level has declined. So you can see that clearly shown on the chart right here. I'm going to zoom it in here in just a second, but just, talking about the action this week, of course, just about 1 week ago, just slightly marginally higher from where we're sitting right now. Of course, the index was at all-time highs. So we are still very, very close to all-time highs right now. So it's far from having a massive trend change or anything like that. All, main and largely followed trend lines are still intact. You can see that on the chart here with 2 of them shown being the red line, the 50-day moving average, green line being our 200-day moving average. You can see those still being in a nice positive relationship. And of course, the index still trading above both of those. So, we still have the nice trend lines intact, trend line buy signals. So, the bull market is still on long-term and medium-term trend, really solid footing. It's just in the short term, I think we're kind of setting up for a little bit of volatility. And, I think Helaine and I, we had mentioned that about a week and a half, 2 weeks ago that, as we were starting to head into August, it seemed like, certainly after the run that markets had off the April 9th lows, we had run, I believe, on the S&P close to 40% higher, in just a matter of a few months. That's, of course, a significant outperformance in just about 6 months' time. So stocks are certainly due for a bit of a cooling off period. We were just printing new highs day after day after day. And the way things currently stand still right now, I still think that come into the year, we're likely to be higher than where we're trading right now. But, I think we're just set up for a bit of a consolidation, digestion period, probably going to have a little bit of volatility and chop. And that's okay. That's what we're here for. That's why we're here looking for opportunities to trade it, right? There, in any type of market, there's always different opportunities, just depending on the market, they can look different sometimes. So that's what we're here to talk about. But a couple things before we move on to our next couple charts and the trade setup I found today. I did want to point out, that if we do continue to get some of this volatile trading, still see stocks, selling off to the downside, particularly say tomorrow, the speech from Fed Chair Powell. I'm really not quite sure. I don't have a great read on exactly, how I think that speech is going to go. Of course, any feel would just be speculation. There's no way to know the tone that he's going to strike. But say he were to come out and have a very, very hawkish tone, that of course would not be well received from the markets, as it's widely anticipated they're, expecting rate cuts here soon. So if we get a really hawkish Powell tomorrow during the speech, I anticipate stocks to probably react not very favorably to that. But on the flip side, if we get a more dovish Powell than expected, then we could see some relief to the upside and see stocks bounce tomorrow. So, again, really important message there. But if we, again, getting back to what I was saying, if we have stocks continue to move to the downside, some key support levels that myself and our team, we're going to be watching really closely. So, of course, we had this period of time right here. Of course, we were kind of eking out some new all-time highs right here. I know a lot of you were in the room, joined us live for some TOD live sessions when that was happening. We were pointing out that, there was a pretty significant lid over the markets for about almost 3 weeks. We were really kind of just drifting sideways, and again, just barely, just by a point or two, eking out new highs. So, that level of resistance, thus, once we finally broke through it, stocks traded back down. It turned into a floor of support for stocks. So that's going to come into play right around, the 6,300, 6,280 level. That's roughly where that the first real key level of support is going to be, the floor under the market. So that's one key level we're watching. Of course, you have the rising 50-day moving average that's going to be right in that range, along in the time that, stocks could potentially reach there as well. So, right around here in the 6,300 to 6,280 range, right in here is going to be the first key level of support. And then, of course, looking back a couple months further, if you see where we had previously run into resistance on the index, looking, call it 6,100, 6,150. That's this period right here when we're trying to push new all-time highs in early June, and we're hitting some resistance before ultimately doing it later in the month in June right here. It's tied back to when we hit the previous all-time highs back here in February of this year. So this would be the second really key level, would be right in this range here. So if you look all the way over to the y-axis on the chart, that would be somewhere, again, roughly that 60 or 6,050, 6,100 range right there. So two really key levels of support under the market. So, again, if we continue to get some downside at the index level, those are two key levels that we're watching, and I think would be important for our folks out there to be watching too. So all that said, we are, again, still having, pretty significant decline in the momentum leaders. That's been the leading pocket of the market this year, is the really strong momentum names. We're seeing some pairing of those gains and some rotation out of it. But I do want to go ahead and zoom my chart in here real quick just to point out something. For those of you that are in our Telegram channel, I did post about this last night in there. But it was this bar and candle from yesterday. I should go ahead and change my chart over to a candle chart. It'll be a little easier to see. But it was yesterday's bar. So it's this one I'm talking about right here. This candle is what is referred to as a bullish hammer candle. And this is a really common one that I follow, and a lot of other technicians out there. It's a really commonly followed candle if you're unfamiliar with it. But it's the reason why it's people really look towards this candle when they see it on the charts is because it's a very reliable indicator of a reversal in trend happening. So, what happens essentially is, you can see here, we opened here on the day. We traded all the way down on this long lower wick on the candle. So the tail of this candle traded all the way down, and then we rallied really strongly, if you remember, yesterday through the end of the day and kind of the last hour of trading, and ended up closing here. So we were still off of the highs of the session, and we were down on the day, but you can see we opened and closed in a pretty tight range. We didn't have much of a wick above here. And so, again, what this is indicative of is the type of trading that we just saw yesterday. We saw, a significant sell-off, but a lot of buyers flock back into the market, buying that dip and pushing stock prices back up later in the day. So that's why it's typically a reliable reversal candle. Of course, nothing is out there. No signal is foolproof and 100%. But that was encouraging to see that yesterday on the charts. After having several consecutive down days, seeing those buyers come back in, buying that dip, and lifting asset prices into the end of the day and lifting the index price. Of course, we're still slightly down again today. Down marginally. So we're seemingly not getting a confirmation of a short-term trend reversal, moving the index higher yet again. But yet, regardless, it was still encouraging to see those buyers flocking to the market in the last hour of trading yesterday. So with that, I did want to go ahead and move on to our next chart here, and it's just touching on a theme that I mentioned earlier. We touched on this a lot on Tuesday, but we've very clearly seen, we started seeing early signs of this just a little over a week ago, and it's continued in a pretty significant way this week, with the sell-off and momentum, rotation out of certain pockets of the market into others. And so what we're looking at right here, again, this is a ratio chart between the S&P 500 equally weighted index and then just the headline S&P 500 index. So you can see that here. Here's our SPX EW, that's our equal weight, and there's SPX, just the regular index. And so in this ratio chart, all we're looking at is trying to figure out the relative performance of the equal weight compared to the headline index. And so when you can see this line starting to slope up right here, as it has been little over the past week and a half roughly, that means that in this case, our equal weighted index is outperforming relative to the headline index. So what that means is that, whereas in the headline index, of course, we all know you have a lot of concentration in the most heavily weighted names. They really typically drive the index's returns on a day-to-day basis. But in the equally weighted index, every stock is weighted equally. So, if you have essentially just more than half of them moving up, you generally are going to have that index rising on the day. And so you can see that we're starting to get rotation. People are pulling assets out of those. Again, the growth stocks, the momentum stocks that have really been working, that have been the leaders all this year, they're rotating out of those into other pockets of the market that have been laggards. And that's just, that's indicative of what this chart right here is telling us, seeing the S&P equal weight continuing to outperform the headline index again over this period of time right here. You can look back, over the past month. Of course, there was a significant period of time where the headline index was continuing in a very consistent basis, outperforming the equal weighted, and that's why this line was sloping down all through here as the market was hitting new all-time highs. You can see all that right here. That's because we had those mega cap tech stocks, those big growth momentum names. They were just ripping higher just day after day after day. And so that is, those are the heavier weighted stocks. That's why this line was sloping down. But now, again, we're continuing to see the reversal in that trend, seeing that broadening out, seeing that rotation into other pockets of the market. So just wanted to highlight this, just saying that we're continuing to see, again, that rotation still playing out, and haven't really seen any signs of that slowing as of yet. Now, next thing I want to point out here is this is a chart of the VIX. Of course, this is the volatility index. It's pretty widely tracked by a lot of traders. And as I mentioned on Tuesday when we were here, we were trading down on this bar right here. I mentioned that, the VIX had fallen and was below 15 that day when I was here last with you. And, typically when you start getting a VIX down into the, 13s, 14s, really below 15, that's generally about as low on average as you're going to see the VIX really go. It typically doesn't get too much lower than that level. And, I was saying, I thought, that it could be signaling there could be some complacency of markets and anticipating that we're going to see an uplift in that VIX price and see that VIX start to move higher. And it actually did that in pretty short order. You can see that it started, it came down here, hit those lows, and it's continued to rally. You see it hit, it came up and hit a shorter term high, over the past couple of weeks. It's continuing to rise today in today's trading. So, I think you're starting to see volatility pick up largely, with markets kind of tensing up into tomorrow's Jackson Hole meeting by the Fed, particularly, Fed Chair Powell's speech there. Again, no policy decisions happening tomorrow. It's just his speech, and he's going to be talking about specifically what's kind of the tension in the markets right now, this battle between, labor market risk and inflation risk. That's actually what his speech is about. So that's why so many people are cued in on what he's going to be saying tomorrow, because it could really give some clues about what actions the Fed may be taking in the upcoming meeting. So all that to say, I think volatility is going to continue probably to spike, through the end of today. See this VIX continue to rise. And probably continue to rise through tomorrow, and pending the outcome of Powell's speech, it could continue to even rise throughout the end of the week. So this was one thing. Still seeing that volatility rise in the markets. Let's see here. Holland, I see you said a bit of an echo here. Let me try and adjust my mic. Sorry about that. Maybe it's my mic was not positioned right. I appreciate you letting me know, Holland. But yeah, so we're still seeing the VIX continuing to spike here. So anticipating that's likely going to continue. Now, with all that said, I'm fully anticipating we're probably still due for some choppy trading, some volatility, and that can be difficult for just trying to trade some of these momentum names, that have been the leaders throughout the year, or even trying to bet whether the laggards that are continuing to, get some rotation into them, so some of the more, defensive names, defensive pockets of the market, whether that run's going to continue or not. But the trade I landed on today is actually this one right here, and it's a name that really benefits from these volatile periods in the market. And this is going to be CBOE. This is, of course, the Chicago Board Options Exchange. And in really volatile periods in the market, when you see volatility pick up, typically you see the total option volumes just soar in the market. So people are putting on puts for the protection for the portfolio. They're buying call options on the VIX. Buying some volatility. In case it picks up, just again, as kind of an insurance or, a risk management strategy for the portfolio. So, when you see, or people are anticipating that volatility is going to pick up, you see those option volumes just really, really spike. And of course, the CBOE, the options exchange, they are going to benefit from that tailwind, seeing elevated, increased interest in trading options. So that, is a nice tailwind just behind the stock right now. And of course, looking at the chart, the trend is really, really strong. It's this, the financial sector as a whole does not have a trend quite this strong, but you can see CBOE, it's been on a very strong confirmed uptrend for quite some time, actually since early this year. It did have some volatility earlier in the year, but you can see it had a big several day drop, but it was already back to roughly its highs in just a couple weeks time. It recovered very quickly. It's maintained its nice bullish uptrend. You can see the initial buy signal happen right back here, roughly in the first couple trading days of February right here. And ever since then, our 21-day EMA has remained above the 63-day EMA, keeping that really strong bullish trend intact right there. Of course, you can see CBOE shares currently trading at about $250 per share. It's trading above both of those. So, this is a really strong looking setup. The stock was just recently hitting some new all-time highs, as you can see on the chart right there, with quite a bit of consistency. It was, hitting them, just new high after high after high right there. It did cool off a little bit. Of course, it had kind of gotten a little into overbought territory. Not shown as much on the chart here with the Keltner channels, but you can see on our shorter term RSI chart down here, several occasions where the RSI got above 70. The stock did come in a little bit. It pulled back over the past couple weeks of trading. Consolidated, traded sideways for a couple days around the middle Keltner channel, and now in the past couple days of trading, it looks like the stock is now resuming its uptrend, and is likely going to be poised to go and challenge those new all-time highs in the next week or so. So this looked like a really strong trade setup in today's trading. And the way I'd look to actually trade this one is, given that this is a fairly lower volatility name, it's a financial, has some really nice tailwinds behind it. The technicals are all lined up very, very nicely for CBOE. I actually look to go ahead and trade this using a directional option. Just go ahead and buying a straight call option on this one. And so I actually landed on the September 19th option expiration right here, and specifically was looking at the 240 strike call. So you can see it's currently trading at $12.45. So this would be $1,245. And so just to show you the current profit potential for this trade here, let me go ahead and it was $12.45. So you can see, put it into our call option purchase optioneering calculator. You can see looking the various different price change scenarios in CBOE stock, come option expiration. You can see if the stock were to, be up 3.5%, This call option has some really, really nice upside potential here. It would be sitting on a 50.8% return at this current price. And then you can see some of the bigger potential moves here. Say CBOE were to, really catch fire and trade up, 10% call option expiration. This call option will be set up to produce a 181.3% return. So some really, really nice potential upside in this one right here. Again, with the trade, just risking just the entry cost, that $12.45 looks like it ticked up by just about 5 cents right there. But I'm actually going to go ahead and place this trade here too. I thought this was a really, really strong trade setup. I really like this one. I found it this morning. So just going to go ahead and place one contract, just per usual in the TOD live calls. I'm going to just placing just one contract. Going to go ahead and put my limit order for this trade at the midpoint for this call option is currently coming in. Just call it 12.50 here. So I'm going to go ahead and put $12.50 there for my limit price on this. Just going to do a day order here. And it's, of course, a limit day order. It's going to go ahead and submit that, and we'll see if it gets filled here. I anticipate that it probably will. Yep, it just got filled right there, right at my midpoint, right at where I put my limit order. So I got filled relatively easy on that. But again, you can see this is the call I purchased right here. It's just a little bit in the money, not super deep in the money, not too close to where it's currently trading at. So has a little bit of wiggle room. Should we get some wobble in the markets, but. I thought that was a really, really strong trade setup. So I'm not sure if we have any questions in the chat, if anybody has anything, but if you do have any questions, make sure to go ahead and put them in the chat there. I would be happy to answer anything or comments or anything that you may have. But this really is seemingly what this week's trading is going to come down to. It looks like tomorrow, again, we're starting to see some volatility pick up in the markets. It's really been just the topic du jour every day this week when you hear people talking. Of course, we had some retail earnings this week that were pretty notable as well. But it really seems like the main thing people are focused on, the main thing in folks' minds, the traders' minds this week is the outcome of the speech tomorrow. It sounds like it could be trivial. This, like, why does the silly speech matter so much? But it does seemingly have some pretty significant bearing on potentially what could be happening at Fed policy meetings coming up. So that seems to be, really what the markets are looking forward to, sitting here in anticipation of and seeing some volatility pick up, I think, largely because of that. And also, you could be seeing some profit taking because of that too. Seeing the profit taking out of the growth names, the momentum names, seeing that rotation out of those into some of the laggards. We've seen that theme really play out this week. So, I think it's certainly all together. Let me see. It looks like we just had a question come in. Let's see here. So, Jim, you said Helaine placed a trade on Alta, and the earnings are coming up on the 28th of August. So do you just hold any trades through earnings? So that's a great question, Jim. And if I remember, I think she placed the call option debit spread on Tuesday for that one. And I think she was pretty significantly deep in the money. So it is certainly something that we are mindful of, Jim. When we're in earnings season, fortunately, now we're typically or at least right now we're past a good substantial bit of earnings, but of course there's names like Alta that are still out there that have yet to report. She would be certainly watching it close. I think she set that debit spread fairly deep in the money. Probably one of the reasons why was because of earnings coming up, because I'm sure that the stock is probably factoring in, or at least the options market's probably factoring in a sizable move, per usual when a company is heading into their earnings report. So she's definitely would be looking at that closely. If she had the spread realize, the majority or potentially all of its profit potential, sometime out before the earnings date, and you got too close to it, she would probably just go ahead and book those profits and lock them in. But one thing with option debit spreads that are in the money, as you're approaching earnings, typically a lot of that time value is not going to be decaying away very fast or very quickly until that earnings report comes out. Typically, those that time premium will stay in those options until the earnings are released. As long as the spread is pretty significantly in the money, still following, her trade management strategy, it doesn't have a large loss or anything currently. She would, if she had a spread and it had, say a 30% plus loss, she would of course have her trade management, risk management guidelines kick in, and she would probably go ahead and just exit that spread as soon as possible and look for new opportunities. But as long as it was still, within her risk management guidelines, or had a profit, still sufficiently in the money heading into that earnings report, she would probably continue to hold that one, and wait to see how the earnings played out and see how the trade is sitting following that report. That's probably what Helaine would be doing. Of course, anybody out there holding the trade, certainly up to your own discretion about how you personally manage it, but that is how Helaine and I would probably look to manage that one. And I see Holland, you were asking a question about the candles, about why is it filled versus unfilled. Let me see. So I think that's just how the chart was just set up right here. It's just a setting. I think that's just on the up days. It looks like the black candles were just designed to just not be filled. I think that's how I typically don't look at candles. I usually am looking at open, high, low, close bars. That's my preferred. But I think just the default setting on stock charts, it just looked like when those candles on the up days, so the black candles, it looks like they were hollow, and then the down days were full with red. Let's see here. And yep, you're welcome, Jim. Absolutely. So that looks like all the questions we had right there. So folks, I really appreciate you sending some questions through. Again, like I said, I always love to get those answered for you and get to interact and chat with you guys a bit. So thanks for that. And also thank you so much for being here live in today's trade of the day. Really appreciate you being here. And we're going to be back here on Tuesday this upcoming week. So, we'll certainly, there's bound to be a lot to happen, with tomorrow's trading after, the Fed speech from Chair Powell. There's could always be some things happening over the weekends, and of course on Monday's trading too. So we'll be back here on Tuesday to break it all down for you, tell you what we're seeing in the markets, how we're reacting to it, how we're positioning our trading, and then, the different opportunities we see out there too, to trade around what's going on. So again, thank you so much for being here. Really appreciate your time to join us here live for Trade of the Day. Hope you all have a fantastic rest of your week and great weekend, and we will see you back here on Tuesday. Take care, everybody.